Good morning. It's Tuesday, May 21st, about 6 a.m. Central Time. So overnight precious metals were a bit lower here after yesterday's increased volatility and volatility overnight. I'm not going to lie, to wake up 2-3 times, check out the price of silver. It's just in my nature. That's what I do. I love these wild ranges here and I love the volatility and I welcome the volatility because volatility creates opportunity. So some things that I'm watching here today, the US dollar's in a tight range. You got 103.71 on the downside. That's your 200-day moving average. You got 104.66, that's the 50-day moving average. I know a lot of people are watching those moving averages. I use fractal geometry to calculate my support and resistance levels, but you got to sometimes dummy it down and look at what the mass population are looking at, because a lot of times the directions are going to break out one direction or the other if we see a violation of either of those key levels there. So a breakout to the upside on the dollar index could impact commodities, could impact two-year treasury yields, and also the gold market. On the downside, that 103.71 could provide a tailwind to the gold market and also bonds and notes pushing lower these treasury yields, and with the dollar index coming off, foreign currencies will go up. So some things that I'm going to be watching today: April Canadian CPI. Why would I watch that? Because of the fact that Canada is the number one trading partner of the U.S. They send over about, $350 billion, maybe give or take a bit more at this point in time. But if their inflation data is going up, chances are our inflation data is going up. Now, we will have a bunch of Fed speakers here all day today: Barkin, Williams, Waller, and Bostic. I think that, regardless of what they say here, I think, and I don't want to get political, I think that these guys are I think the Fed's going to cut rates in September just ahead of the election to try and help the current administration. It's just what I believe, right or wrong, it is what it is. So, metals here, what to watch here today. I guess volatility would be key. How do you measure it? In a simple way for you guys would be looking at the average true range. So on gold, average true range over like the last 10 days, about $33. So on the large contract, 100-ounce contract, that's going to be a $3,300 move back and forth. You're not comfortable with that? Go with the 10-ounce contract, $330 average true range there. On the silver market, $1.04, that's about $5,200. On the 5,000-ounce contract, it's about $8,040 on the smaller contract. So copper, 18 cents. The large multiplier on the big contracts, $250 times the 18. That's a pretty big move. You want to maybe consider the 2,500 pound contract. So 18 times 25, about $500 move in the account here. So crude oil $1.50, S&P 33 points. So just put these things into perspective for yourself here and think about volatility. And as increased volatility goes up, taking down the position sizing, because you're going to get those same movements here back and forth. That all is just risk management. Also, remember, on the gold market, first notice date is May 31st. That's going to be a shortened trading session, so you want to exit that before. I'm seeing a lot of you guys do that, tighten up the stops. A lot of stop losses just below the 2,400 level, 23.95 in that range here. So we'll see if it cleans you out, and then you can start looking at August or December. So one of the big questions I had in the last day or two is silver overbought? So you can measure overbought on a number of different levels here. So looking at stochastics, it is over 80, and that is overbought, but overbought on stochastics to me indicates a bull market is in play. And as long as it remains over 80, it continued to remain irrational as long as the short sellers can remain solvent. So I think that another perspective to look at it would be like defining overbought and saying, hey, where is the all-time high since other commodities are breaking out to that level? Well, you call it $50, we're $18, $19 away. So that's not, I don't consider that overbought at all. If we got another $18 to go, I mean, that's a huge move to the upside. So looking at gold, silver, support, resistance points, I still think on the gold market about 2,400, a little bit below that on there. The silver market, $30 is kind of a line in the sand, but I would anticipate that when you're in these bullish trend markets that you look at the cycle going up and people would be looking at adding positions on these corrections here. So the S&P 500, that's another one that a lot of people are asking, is that overbought? I think that the trend is up, but is it overextended? We will have some ideas to trade some of the volatility in the S&P today. You give me a call, I can give you some of those levels, or some of your active day traders, I'll be reaching out to you. Now, some of the critical levels I'm going to be watching: 53.05, 52.90 on the S&P on the downside. On the upside, it's going to be 53.29. So perhaps looking at some kind of correction down to that support level to extend back to the upside. So crude oil, I think that the bulls and the bears are really battling right now. It's at $80 on the upside, 78 on the downside. Saudi Arabia, their production declines were offset by an increase in exports. That's why we saw some volatility yesterday. So, but I really think that, is that bullish? Is that bearish? And maybe short term keeping prices in check because Saudi Arabia is becoming more efficient at, and they are producing less, and then they're also selling more. So from an efficiency standpoint, they're working really well and they're burning off excess inventory. But we know when you burn off excess inventory, if you have any supply disruption anywhere in any of the OPEC members, it could send prices higher here because of the tighter long-term picture. So some examples of some trades that we're watching, and these are just examples. On the correction in platinum, we got a 2-day correction going, get down to about 1039.60. We're looking at support level right around that 1030. We're looking for a move back up to 1100, $50 an ounce on that. You could look at things like the 1100, 1150 call spread. It costs about $650, $700, might be a little bit lower with that sell-off. Max gain on that would be $2,500 less what you pay for it. Other ideas we're looking at on the wheat market, check out Chicago wheat and also Kansas City wheat, touching limit up at one point. Been one of the strongest performance days since July. The weather all around's been really dry down in Australia, also over in Russia it's been dry. So check out the Grain Express. If you don't get that, you could package it with the Metals Minute. You could also select Grain Express. We'll get you out some agricultural research. I know a lot of you guys farmers, you work with me on the metals side and you want to check out some of Oliver's research. We all work as a team. Love to get that out to you. Also on the sugar market, check out that. We've made a massive low on it and then we're starting to turn higher. So we got some short covering. Is that a buy signal with a stop below the low? Not sure. It's a little bit too early to tell. And again, these aren't recommendations. These are just example trades. So if you're a client, reach out to us. I'll give you the trade ideas that we're putting out. You got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck. Good trading.